Just one word about Asia House. The theme of today might equally well, I think, have been called Opportunity Outlook.
Overestimating China is a risk, as is underestimating China, and that applies both domestically and internationally. In general, Asian exporters have been doing a better job than predicted at managing the downside risk from lower exports to low growth European and to the European economies and to the United States. This is broadly due to the decoupling phenomenon, which has been underplayed, but it's more visible today as you see a massive rise in cross-emerging market trade pattern. If we've learned anything in the last couple of years, it's that the concentration of power is dangerous. That's a timeless lesson. But now we've also observed that the concentration of risk goes almost hand in hand with that, and that too is extremely dangerous.
Second risk factor, overinvestment, excess capacity, too many ghost towns built in China and the rest of East Asia. The solution to China's so-called overinvestment problem is to let China become rich. Once China becomes rich, its people will consume to a point where this overinvestment will be simply a memory.
In terms of measuring the risk, what's important with that is to try and distinguish structural issues from cyclical issues. The second big area is that in Asia generally, unlike in the West, they have policy tools available to them still. In the West, we've kind of run out now. Our policy cupboard is pretty bare. None of this is true in Asia. They've got the policy tools left. And moreover, I would actually, just as a plug for Asian policy-making ability, not only have they the policy tools left, but they've got policy tools that we could and should learn from.
So the question we asked, to renminbi or not to renminbi, that is the question. The big issue is renminbi is still not a freely convertible currency. And so the big issue is, once you raise renminbi, what do you do with it? How do you bring it back into China if you raise that in Hong Kong, in the offshore renminbi market? Now, in the last month, we have heard plans to have London become the next offshore renminbi trading hub, which is very exciting for all of us here in London.
I'm going to frame my comments on China, Indonesia, and India in the context of the global financial crisis, where we heard this morning about how the banking crisis and the debt crisis and quantitative easing has kind of led to a level of distrust in Western economies. But there is a lot of political pressure against such an easing of the renminbi. There is a powerful export lobby that wants to be able to export things cheaply. There are powerful firms that want to retain their access to cheap credit.
What I thought I would do, because I cover South Asia rather than Asia as a whole, is talk a little bit about the sort of geopolitical risks in South Asia, in particular India and its relationships with its neighbours. And in terms of the wider issue of social unrest, this is an ongoing feature of Indian society. It's a very healthy feature in many ways. It is not a feature, however, which has historically led to any kind of sort of revolutionary change in the political system.